Welcome to the Real Estate Baller Show. If you ever like any of the video we posted, if you like this channel, can you do me a favor and hit that subscribe button? It helps us more than you know. And the bigger this channel gets, the more people we can help achieve financial freedom. Thank you and enjoy the episode.
So if we're looking at a facility and we draw a 3-mile ring around it and that we see that there is 10 square feet of self-storage per person, well, we may be getting into that place where it may be oversupplied. But we'll have to look at the demand and look at the facilities to see, are they full? Are they out of units? Are they raising rates? Because there could be a higher demand in that market. It could, like Florida, has no basements and 0 lot lines. And so 10 square foot per capita, well, that's about equilibrium for that market in a particular city. But if we look at the market, draw a 3-mile ring around a site, a facility, and we determine that there's only 4 square feet of self-storage per person, per capita, well, it doesn't always smell a home run, but that's exactly what we'd like to see, is an undersupplied market. And then we'll go to the zoning office to see if there are any other developments that are coming. Are there any permits being pulled, any new construction coming for storage, if we're going to have new competitors? And at the same time, are there more multifamily? Are there more subdivisions? Is there residential coming in? Is there going to be growth in this market? So those are all things to consider when we're looking at a market and looking at a particular facility.
I miss storage back in the day, years ago. You go to a place and you talk to a lady in the front, you get a rate, and it stay that way until you move out, right?
Yep. Mm-hmm.
And earlier or late last year, I decided to go travel. So I put my house up for rent. And obviously I was in the market for a storage unit. And that's when I learned that prices change. The price change constantly. So do you guys use a dynamic pricing software, or with you managing 28,000, is it 28,000 units?
Yeah. Right.
I imagine you have somebody like an assets manager to go and just move the rates around daily. How does that work?
Yeah. Well, first of all, I'm like you. I miss the days when people would move in and the price would stay the same until they moved out, because those are the facilities that we buy, because those people are managing their facilities very well. But yes, on our end, once we own it, we do have a dynamic pricing model, and we do have software that is demand sensitive, and it sets the rates up for us. So it's literally a flip of a switch within the software. It's just a toggle that you click on, and it goes out and it sets the rates based upon the demand in the marketplace. Now, there is some manual work to that, because what we're seeing in some of the markets, especially now, is that what is somebody's promotional rate, their internet rate, much like the airlines, is a little bit different than what the true rate is and what it's going to be. So I don't know if this is what you experience, but when you move in, there's a special 50% off, 75% off, or 1 month free, whatever that looks like. But especially if it's a lower rate, but then you find out, or if you didn't ask, you didn't know what their true street rate is or what it's going to go up to. You might have moved in for $50, but then 3 months down the road, it goes up to $200, because that is the normal rate. That's the normal price. And you see that it truly is the normal price in the market. You just didn't expect that or see that coming. And
that's
so
exactly my experience.
Yeah,
so I signed a contract and I went home and I read it and I was like, oh my God.
Yeah. And unfortunately, and that's not a practice that we employ. We don't discount the rates that heavily. We may offer a 50% off or a 1 month free, but yes, there are some folks out there, some companies that are coming in with a very steep discount and then raising rates 50 to 100% or more just a few months down the road. And unfortunately, what that is doing is giving our industry a bad name. And some of these folks some of the people that have been on the receiving end of those rate increases then got together and called their local news station and talked about the big bad self-storage facility and owners over here that are doing this. And it's some unwanted attention, and probably rightfully so. It's not a tactic that we at our company that we employ just because that's not the way that we operate. You can achieve the same thing just by offering a month free, but then showing them what the rate's going to be no matter what.
Right. Yes. Because you're absolutely right. Like it's $5 for month 1, and then it go up, and then it keeps going up after that with no cap. And I just couldn't tolerate
Well, from an investor standpoint, as long as you're not being egregious and taking advantage of a situation, the beauty of self-storage is that we have month-to-month contracts. And so we do have the ability to raise rates. We don't have to wait for a year. We can do it at 7 months or 9 months. If we're getting full and the rest of the market is full, then we may be able to push out a rate increase and not have a mass exodus. And sometimes they're just nuisance rate increases, as we call them, where it's just $2 or $3. Nobody's going to move for that, but that's where the market is, and that's what the demand looks like. And so everybody's raising the rates by a little bit, and so we have the ability that we can raise rates just to keep up with the competition. And sometimes we are the ones that are setting the price.
Yes, but that's where I actually that's what got my attention to learn more about storage. Prior to it, I was ignorant to the growth of the storage space. And just imagine if we can just keep increasing rent in a single family home. Wouldn't that be awesome?
Yeah, but he can't, unfortunately.
But we can't. Hey, thanks for tuning in today. I do have a favor to ask. If you enjoyed this video, please don't forget to like, subscribe, and hit that notification bell to stay updated with more amazing stories and insights from REBallers. Thank you so much, and we'll see you in the next video. This episode is brought to you by National Real Estate Insurance Group, a national independent insurance agency specifically for real estate investors. I personally use NREIG for my investment properties. They offer a low monthly payment option to help you to lower your cash out of pocket when buying an investment property. If you're looking for insurance coverage for your flips or your rental, reach out to them. You can click on the link in the show descriptions, or you can reach out to Jules at 816-946-8443.